morning. Sure you have a great day. Welcome to tonight's session of daily market review and outlook. So we'll go straight to the chat. As we know, there are no major news for the dollar tomorrow. No major news. So we'll just go straight to the technicals. So I will be starting looking at starting with GBP USD. As you can see, I have a trade on GBP USD. You can see, reason I took this trade, you can see price just filled this fair value gap. You can see price just filled this fair value gap, and you can see when price got into this gap, what happened? You can see the pattern that formed inside this gap. These are bullish reversal pattern. We had a bearish binding bottom, and the next candle closed bullish. Okay, so that's the reason I took that trade, and I'm still holding that trade. I'm still holding that trade. Okay, so what are my expectations for GBP tomorrow? My bias is still bullish. Now, GU has a possibility of clearing this low. They are likely going to clear this low. There are a lot of stop losses residing at this low. So they are likely going to clear this low, okay, before going bullish. And you can see the reason why I had to set my stop loss several pips below the low of this candle. That's about 20 pips below the low of this candle. Yeah, it was 30 pips below the low of this candle, because I know this area, this level is an area of liquidity, and they might want to come for this low before going bullish. Okay, so if you don't have a trade on GU at the moment, I would advise you wait for price to probably clear this low before or during London session before you go bullish on GU. I hope that is clear. That's my take on GU. Let's move to gold. What are my thoughts on gold? As you can see, gold has been in a range for quite some time. Let's start with the daily time frame. You can see gold has been in a range for days. Okay, it has been in a range for days. Okay, so on gold right now, there are a lot of traps. Okay, a lot of traps on gold right now. We have sell-side liquidity, this previous low. Okay, these previous lows are sell-side liquidity. And also we have buy-side liquidity residing at this previous highs. So they are likely going to clear liquidity residing at these highs. My bias for gold still remains bearish this week. It remains bearish this week. So right now we have a sell-side liquidity, we have buy-side liquidity. So I'm expecting price, or I'm expecting liquidity residing at this previous highs. That is the buy-side liquidity. I'm expecting that liquidity to be cleared before selling gold. Okay, I'm expecting that liquidity to get cleared before I go bearish on gold. My bias for gold is bearish, but I want to see this liquidity get cleared before I go bearish on gold. Let's see what we have on 4 hour. So you can see price has also been in a range on 4 hour time frame. Okay, this is a 4 hour time frame. So if you are considering buying gold, if I want to buy gold, I want to see price break this resistance. This is the resistance for today's market. Okay, this is the resistance for today's market. The buyers are able to break this resistance. That is, if a candle closes above this resistance, then one could risk buying gold. Okay, one could risk buying gold. So if you are buying, let's say, five breaks out from this resistance, you want to know the risk involved in the trade. So you can see if you are buying from this resistance, your stop loss should be at this level. This is about 205 pips. That risk is very high, right? It is very high, 205 pips. And the reward is how many pips? Let's say our TP, our first TP is at this level. This is 334 pips. So we are risking 200, let's say 205. So this is like 1:1.5 risk reward, which is not bad. Okay, but you have to be comfortable with the risk for you to take this trade. Okay, personally, I don't risk more than 100. I don't take more than 100 pip risk on gold. If the risk exceeds 100 pips, if the market risk exceeds 100 pips, that trade is not for me. Okay, that trade is not for me. So if price breaks this high, okay, I wouldn't be taking this trade. Okay, I wouldn't be taking this trade. I would only buy gold if price, let's see what we have on 1 hour. Okay. I would only consider buying gold if price probably maybe pull back to this area. This is where I would consider buying gold. Okay. If price pulls back to this area, probably to clear the liquidity. I think this was today's candle. This is the low for today's market. No, this is false. Okay, it's not the low of today's markets. I think, okay, this should be the low. Okay, yeah, this should be the low for today's market. So I want to see this liquidity. Okay, this liquidity should be cleared. Okay, this is where I will consider buying. This liquidity should be cleared. Okay, so if it gets cleared at this point, I can risk buying gold. But at the moment, I'm neutral on gold. Okay, my bias on gold is neutral. If I want to buy, I want to see price pull back, clear this liquidity before going bullish. Okay, so that's my take on gold. My bias for gold is still bullish. Okay, bullish for the day. For the day, my bias is bullish. Okay, but for the week, my bias is bearish. Like I said, I want to see price clear liquidity. That's the buy side liquidity. I want to see it cleared before I would go bearish on gold. Remember, this week is our CPI week, and also FOMC will be released on Wednesday. CPI will be on Thursday. And you know, the major news do have high impact. They do play a major role in the market. So you should also take that into consideration as you trade this week. Okay. So that's it for gold. Let's move to Euro Aussie. What's my take on Euro Aussie? My bias on Euro Aussie is bearish. You can see the markup I did this I think last night. Yeah. Did this last night. I was expecting price to pull back to fill this fair value gap. Okay. This is the fair value gap on 4 hour time frame. And also if we apply Fibonacci from this swing high to this swing low, you can see that price is also at a premium area. And as premium, we sell. Now, after the formation of this candle, this is a shooting star candle. A lot of traders would have executed their trade. And look at the time this candlestick formed. It was late hour of the day. Can you see that late hour of the day? And a lot of retail traders would have executed sell. And where would they have their stop losses? Their stop losses will be at this high, right? Their stop losses will be at this high or few pips above this high. So there is a high probability they would clear liquidity reset at this previous high before going bearish. Okay, there's a high probability they will clear this liquidity and probably would fill this fair value gap before going bearish. So that is what I will be looking out for in tomorrow's market. That's the 8th, yeah, 8th of October. 8th of October. So I want to see price clear this high and also fill this fair value gap before selling Euro Aussie. And if I'm selling Euro Aussie, my TP, my first TP will be this lows. Okay, this will be my first TP. And this lows will be my second TP on Euro Aussie. So my bias for Euro Aussie this week is bearish. And this is where I would be going bearish on Euro Australian dollar. I hope that is clear. I would be going bearish on Euro Australian dollar if price fills this gap and also clear liquidity residing at this previous high. I hope that is clear. So let's move to the next pair, Australian dollar USD. What are my thoughts on Australian dollar USD? Going by the pattern we have on, let's start with the daily time frame. Okay, today's market was bearish, strongly bearish, as you can see. Now on daily, we have a fair value gap here. So price is likely going to come fill this gap. Okay, this is a fair value gap on the daily time frame. Price is likely going to come fill this gap. Also, if we apply our Fibonacci, this is the most recent swing low, and this is the most recent swing high. We want to see price pull back to a discount area. Okay, you can see price just crossed equilibrium. It's currently at a discount area, but we want to see price pull back to level 75.0. This is extreme discount. Extreme discount. Okay, so short price is likely going to come and fill this gap before going bullish. So if you are considering buying Australian dollar USD, patiently wait for price to come fill this gap. Okay, there's a high probability that price will come and fill this gap before going bullish. Okay, so that's my take on Australian dollar USD. I'm looking for buy. That is what I'm looking out for on Australian dollar USD. I want to buy Australian dollar USD. As you can see, there's no setup for buy now. Okay, so my fingers are crossed. Okay, waiting for price to fill this gap before I go bullish on Australian dollar USD. I hope that is clear. I hope that is clear. Personally, I think going for a sell from the current market price is not a good deal. That won't be a wise investment, right? It won't be a wise investment. This would have been the best entry for the sell. This level would have been the best entry for the sell. And the market is trading how many pips below that level. This is where we should have entered sell. We had a shooting star here, and the next candle closed bearish. This is a bearish reversal pattern, so we should have entered sell from this point. And you can see the market is currently trading 141 pips below this level. We should have entered the trade. So this will not be a good risk. Selling from this point will not be a good risk. So wait for a pullback. If you are considering selling, as you can see, a fair value gap has been created here. This is a daily time frame. You can see this gap here. It is a fair value gap. So you want to wait for price to pull back and fill this gap before you sell Australian dollar USD. If you want to sell, wait for price to pull back and fill this fair value gap before you sell. I hope that is clear. I hope that is clear. So let's move to the next pair. Okay, next pair will be USD card. USD card, my bias for USD card is bearish. As you can see, USD card is currently at a resistance level. You can see. Okay, it's currently at, you can see, this is the resistance level. Can you see that? Okay, this is the resistance level. Okay, so if today's candle, that is 11th of October, 11th of October, if this candle closes bearish, we are on the daily time frame. If it closes bearish, then we should consider selling USD card. Okay, we should consider selling USD card. Now let's go down to 4 hour. What do we have on 4 hour? What pattern do we have on 4 hour after the close of yesterday candle? So you can see what we had on 4 hour. Looks like a shooting star, though not a valid shooting star. Okay, not a valid shooting star. So if the current 4 hour candle closes bearish, if the 4 hour candle closes bearish, there is a high probability that USD card will be bearish for the day. Okay, if it closes bearish. So you can see we have this is a Marubuzu. Okay, this is a Marubuzu. So at what price should one execute a sell trade? I would suggest if you want to sell, two things that is likely going to play out on USD card. As you can see, we have a support here. This is a support zone. Okay, this is a support zone. So you want to wait for price to either break out from this. So you should wait for price to break out from this support. Okay, wait for price to break out from this support, or before you sell, or wait for price to pull back. I believe a fair value gap was created after this Marubozu candle. Let's go to 15 minutes. So those are the two scenarios that could play out on. You can see this fair value gap that was created on 15 minutes. So it's either price, you could wait for price to pull back to fill this fair value gap that was created on 15 minutes, or wait for a breakout from this support. Okay, wait for a breakout from this support. Now, if you're going to execute a sell trade after the breakout of this support, you want to calculate the risk. Sorry for the break. You want to calculate the risk involved. And like I've always told you guys, you have to be comfortable with whatever risk you're taking. All right. So if you decide to sell from this point, your stop loss should be at this level. Okay. This is about 34 pips. Let's just assume the candle that will break out from this zone closes at this price. So this is still okay. This is about 34. 34. So sorry for that break. So you wait for price to, so like I said, if you calculate the risk involved, it's not high. Okay, it's still okay. Let's say risking 34, you should set your stop loss few pips above this high. Set it like 10 pips above this high. And if you wait for price to pull back, okay, let's assume price pulls back to this area and you decide to sell from this area, you set your stop loss few pips above this level, the risk will be, I think, 20 something, 20 something pips, let's say 25 pips. But if you are selling from this area, the risk will be about 50 pips. So you should know the risk that you're okay with and going with the risk you're comfortable with. Okay, so if your account is small, you want to wait for price to pull back to this area. Okay, so that your risk on the trade will be less. But if you have good capital in your account, you can go in, okay, after the breakout from this demand zone or your support zone. Okay, so that's my take on USD card. My bias for USD card this week remains bearish. My bias for the day also on USD card remains bearish. Hope that is clear. So let's look at GBP JPY, and that will be the last instrument we'll be looking at in today's market, today's analysis. So let's start with daily. How did yesterday candle close? That will give us the direction for tomorrow. Okay. So yesterday, GJ was strongly bearish. GJ was strongly bearish. So what are my expectations on GJ? Let's go down to, so we had a support. This was the support. We also had a support here. The resistance on support. Okay, so let's go down to 4 hour. Okay, cool. So on 4 hours, you can see I think we had a very tiny, let's go down to 1 hour. There's a fair value gap here. So my bias for the week on GJ is bearish. Okay, my bias for GJ this week is bearish. Now on GJ, we have a fair value gap. Where do we have that? Okay, there's a very tiny fair value gap there. You can see, though it got filled at this point before going bullish. So this is a fair value gap. Okay, on 1 hour, let's say 15 minutes. So on 15 minutes, we have another fair value gap here. Okay, so I want to see price fill these gaps, either this or this. These are the two areas I will go bullish on GJ. Okay, these are the two areas I would consider buying GJ. So let's go back to 4 hour. So 4 hour, if we apply our Fibonacci, this is the most recent swing low. Okay, so if we apply Fibonacci from this swing low to this swing high, okay, so you can see price is sitting at equilibrium at the moment. You can see price is at what? Equilibrium. Okay, so we want to see price fill this gap. Price has to come to a discount area for us to buy. It's just at equilibrium at the moment. So we want to patiently wait for price to pull back and fill this gap or this before we go bullish. And if we are buying from any of this area, your TP should be these previous highs, these areas of liquidity. Okay, so that'll be it for tonight's session. If you have any question, please drop it in the comment section. If this is your first time watching our videos, kindly subscribe to the channel. Also, if you got value from this video, give it a thumbs up. Okay, look forward to having you in the next session. Do have a profitable trading day.